right, I'm joined now by Noah Yosif, Chief Economist of American Staffing Association, for some insight into the labor market. Noah, thank you so much for joining us this afternoon. So let's talk about, we had new data out today, jobless claims, showing that they did tick a little bit lower, 238,000. That was down from 243,000, but still around the 10-month high. What do you take away from that?
So today's modest decline within initial claims was certainly a welcome development. However, looking at broader trends, the indicators still suggest that we are in a cooling labor market. Not only was the decline, it came in under consensus expectations, but also both initial claims as well as continuing claims are at their highest levels since January of this year. And so therefore, both initial claims as well as continuing claims add to a broader body of economic evidence that's coming in, be it a higher unemployment rate, lower levels of job openings as well as hiring, as well as concentrated gains within non-farm payrolls, all of which suggest that the labor market is in a controlled cool down.
Controlled cool down. So what numbers are you paying attention to, especially when it comes to, say, the next level for unemployment and the next big jobs report?
Absolutely. So 3.5% to 4% unemployment is still considered very, very good. And so therefore, I would not expect to see the unemployment rate depart too far beyond that 4% level. However, I am looking for a more diversified non-farm payrolls number, because that's going to show that the labor market is still firing on all cylinders rather than on the backs of just a couple of sectors.
And you say off the back of a couple of sectors, because, yeah, that's one of the things that stood out to me in the last big jobs report, that there was strength in certain sectors like healthcare, et cetera. When you're looking for that across the board growth, when you see some weakness, what does that tell you about the state of the broader economy? Are we starting to see kind of more, are you expecting more softness this year?
Yes, absolutely. So bringing some cooling within the labor market has always been an integral component of the Fed's broader strategy of bringing inflation to heel. That's because the Fed has viewed inflation as a problem of too much consumption, otherwise known as demand pull inflation. And so therefore, by raising interest rates and thereby raising the labor costs of businesses, the Fed has been hoping for the labor market to lose a little bit of steam, thereby reducing consumption from the broader economy. And largely that strategy has been working. On Tuesday, we saw a very subdued retail sales print, and numbers for this past quarter's GDP also showed that consumption was significantly down. And so therefore, by inducing this sort of controlled cool down within the labor market, the Fed is actually able to reduce consumption and at the same time bring inflation slowly to heel.
And then when you talked about kind of the big jobs report, one of the things that stood out to me was the labor force participation rate, and that showed it inched down some. And even when you look at the metrics, like when you look under the hood, like the people working part-time but want to be working full-time, is that signs of more cracks in the armor when it comes to the labor market?
Yes, absolutely. So what we're seeing right now is an economy that is in a cool down. And so therefore, we're not seeing too much movement in terms of workers looking for new opportunities and employers looking for new workers. And so therefore, we are starting to see a lot more people make do with what they can. A lot of times that's part-time work, gig work. And so therefore, one of the indicators that we're looking at quite closely is the ASA staffing index. This measures temporary help services, and that has actually flatlined. And so therefore, we're thinking that it's probably going to rebound very soon because of this slowdown that we're seeing within the broader labor market as well as the economy at large.
Interesting. So you tend to see that tick up when there's weakness in the labor market. So speaking about your surveys, you all recently also put out a survey on employee preferences when it comes to work environment. Tell us about some of the main takeaways there.
Yeah, absolutely. So what we've noticed is that is that workers are looking for a balance in terms of their work and as well as their personal life. And so that very much applies to their preferences about working in the office as well as working from home. One of the biggest trends that we saw was that amongst the youngest cohort of workers, millennials and Gen Zs, most of them were looking for some sort of a balance in terms of when they have to go into the office versus when they have to stay at home. So one of those flexible sort of arrangements. We've also seen that a lot more workers are very interested in benefits when it comes to looking at a new position. So therefore, benefits like paid family leave, paid sick leave, wellness programs, they are all now becoming a standard part of that package that an employer needs to offer in order to attract the best talent.
So benefits matter. It's so interesting, once upon a time, and it wasn't that long ago where employees had the upper hand, but now they don't have it as much, especially with the desire for hybrid work or remote work. Noah, any final takeaways that we should think about when it comes to the labor market?
Diane, I would say that the biggest takeaway right now is to be able to look at the cadence of cooling within the labor market, because that's also going to be what the Fed is looking at from now until its September meeting, when it has the first real chance of possibly lowering interest rates. So what's going to matter is how fast the labor market cools and then how that translates to consumption. And if the labor market and consumption are cooling quicker than what the Fed has anticipated, then we might possibly see either a greater rate cut or more frequent rate cuts. Otherwise, if the labor market continues to post strong gains but still remain in a cooling fashion, then it's going to be up to seeing more progress on inflation before we see interest rates come down.
Interesting. Okay, great insight. Paying attention to how fast the labor market cools and what that does to consumption. We'll pay attention to that. Noah Yosif, Chief Economist, American Staffing Association, with an outlook on the labor market and more. Thank you, Noah.